Alright, thank you guys so much for tuning into today's video. It is June 11th, 2025, and the purpose of this video is to do a recap over the execution that I took on June 10th, 2025. And it is based off of this hourly. The higher time frame objective is based off of this hourly candle here. So this hourly candle closed pretty bullish, right? Where it closed is relatively closer to the hourly high than the hourly low. And you can anticipate that the next hourly candle should create a open low high to take out the hourly candle, the previous hourly candle's high, right? And so with that in mind, I am going to be bullish for the next hourly or for the next hour. And how I aligned myself with the bullish hourly order flow is I went onto the 30-minute time frame and the 15-minute time frame. And so to take a look at the 30-minute time frame, right? I noticed that this 30-minute candle here, with the way that it closed, it suggested to me that we were most likely going to take out the 30-minute high. And so the 30-minute candle is bullish. And so I pivot onto the 15-minute time frame as well, just to see what it looks like on the 15-minute time frame. And I noticed one key aspect is that the 15-minute high is the same high as my 30-minute high. So that means that instead of us completing the 30-minute, or instead of us taking 30 minutes to take out the 30-minute high, it should only take us 15 minutes to take out the 30-minute high, because the 15-minute high is the same high as the 30-minute high. That seems a little bit confusing, but I think it will make a little bit more sense as you gain a little bit more experience. But yeah, so the higher time frame objective is based off of the hourly power of 3. The way that I align myself with this bullish order flow is based off of the 15-minute time frame / 30-minute time frame. And one thing to notice here is that the 15-minute high / 30-minute high is different from the hourly high. So with that in mind, the idea behind this is prices should take out the 15-minute high, and after we take out the 15-minute high, we should expand higher towards the hourly high. So imagine the hourly time frame the hourly objective in this sense as a really big magnet, right? And so the magnet is going to continue to it's going to continue to pull prices towards that objective, and it's going to force price to take out the 15-minute high, which is already an objective based off of the model, right? And imagine it's like one small magnet, which is the 15-minute high, and one really big magnet at the hourly high. Both of those magnets are in support of one another, right? They both draw prices towards the same direction. And so now that I have a higher time frame objective, I have a model, the only thing left is an entry pattern. So going from the 15-minute time frame, I saw that there's a 2-minute fair value gap that should be respected in order for us to see higher prices, right? And once prices retraces or rebalances into this fair value gap, that's where I take my entry, right? And so you'll see here, the idea here is that once prices rebalances into this fair value gap, it should be respected in order for us to take out the 15-minute high. After we take out the 15-minute high, there's another magnet drawing us higher towards the hourly high. And so that's kind of what we're looking at here. So there is the 50-minute candle, there is the 30-minute candle, and notice how you get a closer look at how these candles are bullish, right? Like with the way that we close here in this 50-minute candle, the easiest assumption for me to make is that the next 15-minute candle, bare minimum, is that we should take out the 15-minute high. And so that's kind of the logic behind this setup. And so here you can see once prices rebalances into this fair value gap again, I take my entry and I end up getting stopped out. We got stopped out at the fair value gap, at the 2-minute fair value gap low. And after I get stopped out, prices creates SMT here with ES and we reverse. So this kind of goes back to the fact that a strong swing high and a strong swing low will always be accompanied with SMT. That's what I mean here. So this swing low, the fact that there's SMT makes it possible that we could reverse here, right? And so I get stopped out. This is me getting manipulated. I don't think like us completing the objective is valid according to the setup, right? But I just got caught in manipulation, which is completely fine. And yeah, I mean, I think this is fine trade, to be honest. I followed the 3 components that I had, which was higher time frame objective, model, entry pattern, everything was present. It's just I just got manipulated. Sometimes that happens, and that's completely fine. And yeah, one thing that I do want to mention here too is that I was considering on re-entering here. So when prices closed back above this 2-minute fair value gap, we didn't get another chance to re-enter. We just, like, literally where my mouse is the candle where I was considering re-entering. But as soon as we opened up on this candle, we took out the 15-minute high and the hourly high, and the objectives were completed. After we completed the objective, I no longer had an objective or a model to use, right? But that's completely fine. So that's basically the setup I took yesterday. And I think that's pretty much everything that I wanted to recap. So yeah, higher time frame objective was based off of the hourly power of 3, which suggested to us that we should take out the hourly high. The way that I aligned myself with the hourly order flow, the bullish hourly order flow, was based off of the 15-minute power of 3, which also suggested higher prices. And my entry pattern was a busy, a fair value gap that supports the idea of higher prices. So notice how all 3 of those components suggested higher prices, right? And to go over the risk to reward details of this trade here, it was a 1-to-1 at the hourly high. You can see here at the hourly high, the risk to reward is a 1, which is I'm risking $1 to make $1. So total risk is $95. Total reward is $95, 1-to-1. The amount of ticks I lost in this setup is minus 38 ticks. The number of contracts was 5. So this was a 5 contract trade. And the net profit was minus $100 and 60 cents. And this is due to the fees and a little bit of slippage. But the slippage was like maybe like $3 or so. And so this leaves me with a remaining account total of 10,000 $10,086.58. And so that's pretty much the trade that I took yesterday. And yeah, I think that's gonna be all for that video. Thank you guys so much for tuning in, and until next time, be safe.